and welcome back, Peter Boockvar. How are you, buddy? Waiting for you to unmute, and we have plenty to talk about.
Yes, thank you.
All right, so great to have you back here, Peter. You've long embraced precious metals a long time ago, many dollars ago in silver, um, many hundreds of dollars in gold. Very nice call. I know you went through some stuff when gold wasn't doing anything and Bitcoin was taken out, really, uh, outperforming gold. The opposite
You
is
mean you mean
happening.
Bitcoin was the new gold?
Yeah, Bitcoin, that's right.
Right, I was
Bitcoin,
told that about a million times.
yeah. Well, it's not acting bad itself, but why don't we talk about and like reel back towards the Fed and then China and the whole world is easing. And why are they easing? We, our economies, global economies, weakening? And do you think China's going to be successful this time around? I mean, the China's charts look like, kind of a moonshot, a rocket taking off a launching pad.
Well, I'll start with China, and
Okay,
I've been a close watcher of China for a long time, and
you have.
have been, yeah, and
And
have,
disappointed at times, like the reopening trade that never happened.
yeah, exactly. And
Okay.
we've been long some China-related stocks. We've been long the Macau stocks. We've been long anything touching travel and leisure on that reopening trade, which actually has been okay. Trip.com has been pretty good to us, and also a few others. But containing our position in light of still the controversies with China and Taiwan and our relationship with them. But we know that their economy has obviously been mostly under pressure because of what's going on in residential real estate, and everyone's been waiting to see how China was going to deal with this. What they've done up to this week was really more focus on bankrupting a bunch of developers to sort of rip the over-levered band-aid off, which they were very successful doing. Which ironically, in the US in '08, we just bailed everybody out. China didn't want to do that, but they're realizing their economic consequences at the same time. So I do think that the announcements this week. Let me step back for a second. So I entered the year. One of my contrarian trades was the Hang Seng was going to outperform the S&P 500 in 2024. And boy, was that wrong. For not only was it dead wrong in January because the
Yeah,
Hang Seng tanked while the
right.
S&P rallied, but it was certainly dead wrong up until last week. And now they're actually getting pretty close to each other because Chinese stocks trading in Hong Kong, and I'll focus on those rather than A shares, got extraordinarily cheap. And for reasons we know, I mean, that they were cheap for a reason, but I think that the daily bashing of China, I mean, I
Yeah.
can't think of any, in all the years I've been doing this, I can't think of any asset class, and I'll call Chinese stocks an asset class, or I should say the Hang
That
Seng an
are
asset
cheaper,
class.
that
Not
have been
actually
this cheap.
cheaper, but have been where the sentiment has been this bad. I don't know any other thing that I've seen where the sentiment has been this bad. And when you get to when people use the word uninvestable,
Yeah,
that's when the sentiment. Now, of course, you can be Russia where they freeze all your assets. That's the one thing you have to be careful of course. But I think we just pushed the envelope too far. And to tie this back into the Fed and other central banks, what's interesting is that we have the inflation spike, we have the inflation comeback coming back down. And you have these central banks that are essentially catching this falling inflation knife in the sense that rather than waiting to see if inflation sustainably stays low, they're more hoping and praying that it does, and thinking that just because you have a two handle again in inflation, that somehow we can declare victory on inflation. It's sustainably keeping inflation low where you win the war on inflation. All we're doing now is winning the battle.
right.
So now I grant them they can some rate cuts. They were tight for a while relative to inflation. The economy is very squishy. Okay, so I'll give you some rate cuts. But the expectations that we're in the cusp of a major multi-year rate cutting cycle, I think is just way too cute. And to think that inflation is just going to fall back to 2% and then magically stay there is way too cute too. And the China
Okay.
news, I think, is waking people up to the fact that just imagine if China's economy stabilizes and what that will mean for this whole inflation battle. You can see an inflection right back up again on goods prices. And it would throw all these plans of central banks out the window, and particularly the US markets complacency that the Fed has our back, the Fed put its back, and everything is just going to be just fine. And we have all this faith that the Fed will glide us to this very smooth landing.
Right. Yeah, there is a ultimate confidence, and I think a lot of this money. Tell me what you think of this. That people that fear owning Chinese equities because of recency bias over the last several years. Um, it helps all the global markets, and they're parking their money. A lot of people are parking their money here because it's just as bullish for the US as it may be for China,
Well,
what
what
they're
happens in
doing.
China is not necessarily bullish for here because we don't sell that much stuff to them. And in fact, with tariffs and all these different barriers that are going up, we rely on them much more than they rely on us. We buy that 550-ish billion dollars worth of stuff from them, and they buy maybe 150 billion dollars worth of stuff from us. And China has $100 billion trade surplus, and basically every month. So the rest of the world is much more reliant on them. So strength there, particularly on the domestic side, doesn't necessarily help us here. Now it's going to help maybe Starbucks and Apple and Estee Lauder that are doing business there, but we have to be. We did fine our markets and our economy with trouble in China. Just because China recovers doesn't mean that we're necessarily going to benefit. And if anything, if this restokes inflation and interest rates start heading higher again, then we got big trouble. And particularly with central banks that have totally gotten complacent when it comes to this inflation battle. So this is great for Chinese stocks, no doubt about it. It's hopefully, it will be good for the Chinese economy because what's good for their economy is going to be good for Asia. And to tie that back into the US, what's good for Asia will be good for us and the global economy. Half the world's
Right.
population is there. I've
Right.
been bullish on Asia, not just China, for years. Um, Essentially betting on the growing middle class in that region. And if China can stabilize, there's a very exciting investment story in Asia.
Okay. And let's go to Asia, because when the yen was trading up near record highs, I read your free stuff that you send from the book report, and when last time you were here, you thought that the yen was topping. That was here. You were here about 3 months ago, and the way you were participating in it is buying 7-Eleven. So did
Yes.
this massive decline? How do you like the memory, bro?
Well, Seven
Anyway,
Eleven that was pretty good. 7-Eleven
yeah,
actually, soon after we spoke, actually got a takeover bid.
yeah,
Um,
okay, all
so
right,
that helped that trade. And we're actually still in it, thinking that if it doesn't go through, there's still a very interesting growth and value story there. And if it does go through, then that would be positive too. So we remain bullish and long, and bullish and long Japanese stocks as part of my Asian team, because if there's somebody who's going to benefit from a China recovery, it's corporate Japan.
okay. Yeah, you have a feel on the dollar. There's a lot of bears here, Peter. I'm starting to get some signals that we might be setting up. Maybe it's going to be geo stuff, that we're setting up some type of low in the dollar here, whether we, sell off one more time or not, that there could be a pretty good rally. I've even seen counts that could take the dollar back to 106. What narrative would be behind that? Would that have to be risk off happening for the dollar to rally in that type of dramatic fashion?
Likely, but we have to wonder whether the dollar will be that risk off currency again, like it was in 07,
Right,
08. To
right,
me, we're at an interesting point here in analyzing the dollar because we all talk about the exploding U.S. debts and deficits. When will it matter? Will it ever matter? And if it does matter, where will it be reflected? And the knee-jerk reaction is to say, Well, it's going to get reflected in the Treasury market. We'll see a backup in yields. We'll see a failed auction, whatever. And I'm beginning to feel that concerns about U.S. debts and deficits is already being reflected in the currency market. And whether that's an outgrowth of what happened with the EU and the U.S. Freezing half of Russia's central bank reserves, and other central banks said, "Hey, we owed too many dollars. Let's diversify. Let's buy gold as one of those assets that we need to diversify in." But more of the world is transacting in key commodities and things non-dollar, and so I do think that worries about us is beginning to be reflected, and in the currency market, and maybe it'll happen there before it happens to the Treasury market. So yes, there's some interest rate differential thing here going on. Yes, the Fed's cutting, so the dollar is weaker, but other central banks are cutting too. The Swiss National Bank cut to 1%
Right.
today.
Yeah.
So it's not like we're the only one cutting outside of Japan. Of course, that's looking to hike. So I think the dollar's got some potentially bigger issues here than just analyzing it with our central
Technically.
bank versus others and rates here versus rates there. That worries about U.S. debts and deficits, I think, is being seen first in the FX market, and then at some point we'll see how it rolls into the potential
Equities.
disruption in treasuries first, and then we'll go
Okay.
from there.
Okay. So we've had nice pullback in TLT. Um, your view on bonds? Is this something?
Um,
Is it in the void, or do we have another pop coming in bonds?
so I've been bullish short-term bonds, bearish long-term bonds. I think the
Okay.
375-ish level in the 10-year is a huge level, and I've been saying that for months now because that was the level, give or take, from which we saw the 10-year yield launch last summer to 5% when the BOJ essentially got out of yield curve control. So now that we've come back down here, this level seems to be holding. And if China has any success, you want to be selling the long end and you want to be buying commodity stocks, which we're long. Uh, so I still think that the short end of the curve is much more attractive. I see no attraction in the long end of the curve and think that yields head back higher again. And this complicates what the Fed's doing. People think they're getting this interest rate relief by the Fed cutting interest rates. Well, maybe yes, if you're a SOFR plus borrower, but in real estate and you're getting a loan priced off the 10-year, you haven't gotten any relief over
Yeah.
the past
You
couple of
haven't.
weeks. Yes, we're down from the highs, but 380 is still a more elevated level than people were hoping for.
Yeah. It looks like it could have 4% in it. I wanted to move. I know that you like energy, and specifically, I believe you've been bullish natural gas. It looks like it finally came out of the hole, Peter. We had a nice little, I don't know, 30% move in natural gas. Still constructive. Do you own the
Yes. Well,
shares?
I think, yes, we're long EQT and some other natural gas equities. And I do believe that people are realizing between natural gas and nuclear, they are a crucial part of the energy
Transition. Yeah.
transition that people
Yeah.
want to move with. And and not only that, but obviously the instability of natural gas supplies in Europe has created a massive LNG global market where the U.S. can be a major player in that via its export market. So I remain bullish in long natural gas.
How about uranium? Have you tiptoed into that at all?
Yes, we've been long uranium for years. Sucked wind for a while, I will tell you
Yeah.
that. So I
Yeah.
was definitely very early, but yes, we've been riding this uranium rally and continue to do so.
Okay. This is kind of best of breed, isn't it, Cameco? Um,
Yes.
okay. So, I've noticed, and I know you look at everything. We were pretty fortunate with inflation coming down because agricultural commodities have been depressed. They really fell apart after the invasion of Ukraine, and they're acting differently. Could this play into your scenario? I mean,
Well, you said
we,
ag?
yeah, eggs,
Yeah.
grains.
So yeah, we I was long the fertilizer stocks and going into the Russian invasion, obviously not believing they were going to invade, but we were long and sold on that spike. And a few months ago when I saw the positioning in corn and soybeans and the
Yeah,
CFTC data, net speculative short positions rising to record highs. I said, let me take a look at this, and particularly combining with the fertilizer stocks that got cut in half after that 2022 rally, and we started
yeah,
buying them again. Mosaic and Nutrient in particular. We're a little underwater with Mosaic around 30-ish, about 30, and Nutrient around 50. But thinking that these stocks have been really beaten up. They're very cheap. They all pay good dividends. They all generate cash flows at the bottom of the cycle, and we like it. Now, where corn and soybean prices go from here, I do think they go higher, but they're definitely depressed. But that's when you want to buy
right,
commodities of any sort, is when they're depressed.
right. I mean, you could have been saying that for years, but the timing looks good now. So that's how you combine, fundamental analysis with technical. You could have a narrative, but you still need a technical reason to go with it, right? And you
Right,
looked at
exactly.
commitment of traders was your kind of go signal. Me, it was RSI divergence everywhere. So I knew you'd be able to answer these questions about grains because I know you look at everything. Is there anything we haven't covered on the board here, Peter,
Uh,
that you want to talk about?
I mean, I the what I think is interesting too with the, getting to the U.S. stock market is, on one side, positively, the market has broadened out. The obsession with the top 10 stocks got so extreme. And I think, importantly, after going through Q2 earnings season, investors started to sort of differentiate this whole AI tech trade and saying that, okay, we have the AI tech spenders and we have the receivers of that spend. And people starting to question those that are spending 15 to $20 billion a quarter in capex. Is that going to be a worthwhile return? Will they derive a worthwhile return on that investment? That, of course, remains to be seen, but people started to question it. So I think the AI tech trade, notwithstanding, Micron jumping today, that's leading a, a rebound in it. I think in terms of its dominance and outperformance relative to everything else is over. So I'm encouraged to see the markets expand their imagination and buy other things. Uh, but whether the other things can sustain itself, I think a lot will depend on how the Fed threads this needle, and whether the slowing deterioration in the labor market picks up steam that can then raise the odds of a recession. We'll have to see how this plays out.
Yeah, it looks like NVIDIA can generate another high, but there's even bifurcation in the Mag 7. Like NVIDIA could squeeze out a new high, but
Right, but even NVIDIA,
I don't think Google will.
right? I think that well, yeah, there are risks to each one of these stories now in terms of all the spend, and then Google obviously dealing with a lot of competition too, in terms of breaking their grip on their search market share. These are things we have to watch. I think my point is mostly that maybe like I said, the dominance of the AI tech trade and sucking all the oxygen out of the room is sort of played out, and at least we can maybe start buying other things.
Yeah, like Freeport McMoran. The whole
Yes,
cop, the
and
whole
some value stuff. I mean, there's some cheap stuff out there that there was certainly a wide chasm between growth and value for sure.
okay, and yeah, I think that we've really covered anything. Any questions from the gallery, from attendees here? What do you got? Anything? Okay. Uh, 5, 4, 3, 2, 1. Clarify corporate Japan. And so when does the junk hit the fan?
Well, corporate Japan, again, you're talking about companies that will benefit hugely from any growth in Asia, since that's where they are, particularly in China. Uh, Japan is still a manufacturing powerhouse, so um, they're going to benefit not only from what they sell to Asia, but Tokyo, for example, in Japan is a great destination for tourism. Uh, I think a quarter in 2019, I think it was a quarter of Japan's tourists came from China. In Thailand, I think it was a third. So the rest of the world benefits a lot from the Chinese tourist, from them spending on just things. So that's what I mean by corporate Japan benefiting from any improvement in the Chinese economy.
Okay, well, the world's going to change in November. Uh, well, what do you think is going to be? I'm not going to ask you to predict it unless you want to tell us who you think is going to win, but what's market impact of these presidential elections?
I think if there's a split Congress, I don't think
Yeah,
that it's really going to matter, even though, of course, we'll still have to deal with the regulatory state, depending on who's the president. But I think there are high odds that will be a split Congress. And for markets, it probably won't have that much of an impact. Now, we'll
okay.
have to see if the Trump tax cuts expire in 2025, they're not extended, we get a rise in the capital gains tax and others, then that could have an impact. But a split Congress could sort of mute any of that impact.
And if it's not, it'll be either Harris or Trump running wild, right?
Exactly. I am worried though about all the tariffs on both sides. I say both sides
Yeah.
because Biden certainly didn't take off any of the Trump
No.
tariffs, and going into this global protectionist regime is not a good thing. Maybe it sounds good on paper to them. Let's have everyone in the U.S. build everything here, but um, I think that's more pipe dream than reality, and that's the thing that concerns me.
Yeah, and historically, Peter, wasn't it Smoot Hawley or Harley before the Depression that actually was one of the contributors in the 30s?
You're exactly right. That was a major contributor to the recession becoming a depression.
Okay, and so if we're going to double down on that, that could have major implications for everything.
Exactly.
Surprised it took this long. It hasn't had any impact really. Have you seen any impact from it besides paying higher prices for things with tariffs?
Well, you look at U.S. manufacturing went into recession in 2018,
That's right.
driven by these tariffs. And if you look at the manufacturing component of industrial production, and you have not exceeded your previous highs.
Okay. All right. Well,
In fact, I'm in front of the chart right now, and I'm looking at manufacturing production within the monthly industrial production data. That peaked in September 2018.
wow,
That
that's a
was
long time.
when the tariff battle was really heating up. We have yet to exceed it.
Okay. So it's under the surface of the market, it's already happening.
Right. So,
Yeah.
on one hand, I understand let's protect steel and aluminum, for example. But on the other hand, there are more users of steel and aluminum rather than producers. So you're pricing out the makers of stuff that use steel and aluminum in order to save steel and aluminum, which we can get from many other countries in the world outside of China. We barely import steel from China, but we decided to tariff them anyway. I think 5% of our steel imports come from China.
Okay. Well, everyone, I advise you to go to Peter's Substack, peterboockvar.substack, and follow him on X at pboockvar. And Peter, thank you so much.
Thank you, Dale.
I feel like we know each other after all this time.
Yeah, I always
So,
appreciate giving me the chance to be on.
all right. Well, we do appreciate your analysis. Congratulations on the things that are working for you.
All
You
right, thanks so
deserve.
much. Great to
All right,
talk.
Peter. Yeah, Peter Boockvar, everyone, follow him and learn and have an idea about the fundamentals that are happening behind your charts. So that's
Thanks.
a wrap. All right, thanks, Peter. That's a wrap. You could join the team in 19 minutes on the morning edge, and don't just count your, I don't know, whatever you're counting. Don't just count those. Count your blessings, and that's a wrap. Take it easy. I'll see everyone. Adios. You're welcome.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.